Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Jeffery Halley and my co-host today is Brian Fernandez. It's the 22nd of January and our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Welcome, Vishnu.
Hi, Jeff. Hi, Brian. Good to join you, gentlemen. Thanks for having me on.
Before we get started with Vishnu, let's just take a look at our Asian stock markets and I'll hand that over to Brian.
Now, we'll start off, thanks, Jeff. We'll start off with the SGX, the Straits Times Index, is up 0.09%. Then we look across the region, we see the KLCI, which is up 0.37%. Shanghai is down 0.94%. The ASX All Ordinaries is up 0.55%. The Nikkei is up 1.33%. The Hang Seng is down sharply. It's down 2.04%. Rounding up the numbers, then we've got the Kospi, which is pretty flattish at up 0.06%.
Vishnu, before we move to the Asian markets, let's just take a moment and reflect on last week and the data that came out of the United States regarding the US consumers. The US consumer just can't be bowed, it seemed, despite all the bad news running around. We saw great consumer confidence and retail sales numbers coming out of the US last week.
You're absolutely right. You hit the nail on the head. And it's the resilient US consumer that's driving the US exceptionalism story now. The one thing that perhaps is interesting to take note of is where we ended up with US consumer sentiments, particularly the one from University of Michigan, that ties up very nicely with the drop that we've seen in US gasoline prices. So the negative correlation between gasoline prices and consumer confidence in the US is a well-established and articulated fact, and that has come through. But markets are still, going with the exceptionalism story, particularly given that the consumer sentiment data has come on the back of very strong retail sales. The only reservation that anyone who thinks about this a moment longer would have is the fact that they can't both trumpet a very resilient US consumer, but at the same time hope to get deep and steep rate cuts that further fuels asset market rallies.
Mm-hmm.
Now, I want to then take a look at the other side of the equation, Vishnu. So we've got US exceptionalism, but then we've got all these constraints in China. Property market in trouble. We've just had today data coming out from China, which where they've kept the prime loan rates unchanged. We've got also a property developer in trouble. What's your take on this? And is that also fueling perhaps the shift away from China to perhaps India as well as Japan?
That's a really interesting question on the shift. But before that, we need to examine China. It does appear that Beijing is fairly stoic, deflecting hopes for that kind of no holds barred, throwing the kitchen sink in type of stimulus. But one also appreciates that there are multiple constraints that Beijing has to work with. In particular, is renminbi stability or wider financial stability, as alluded to by the policymakers, that they don't want to stimulate the economy this year, but take on very long-term risks. And I think that's a very thinly veiled reference to a build-up in leverage and fears of a so-called Minsky moment. So a lot of the stimulus would probably come from the fiscal side of things. That's not to say that would not compromise fiscal stability, but I think the trade-offs would not be as sharp. So I think as we get into the next 2 months, investors will remain very focused on details about whether there's going to be forthcoming government support, whether this will be backed by central government debt issuance, and so on and so forth. Without a doubt, I think this does underline the structural shift away from China. As we've said before, the China Plus One policy applies not just to investors outside of China, but arguably to Chinese businesses within China as well, because they need to look at how they're going to hedge out. And so whilst they focus on domestically driven growth within China, I think the hedging out is an inevitable outcome of the geopolitics that remain in place.
And Vishnu, I just want to ask you really about that. That's not been talked about enough in the media. We all talk about a China plus one for external investors and people moving their factories and production and stuff like that out of China. But I think less has been spoken about really Chinese investors themselves de-risking their investments. And we could use examples like Foxconn as an example, really, of moving its production facilities away from China into places like India and Vietnam.
Yeah, I mean, there's going to be two aspects of this. One would be China as a manufacturing base would become less viable in an unimpeded sense for global exports. So depending on the industry you're in, the sectors you're exposed to, you probably need to hedge away. The other aspect of it would also be very strategic investments, sometimes geopolitically sensitive investments that will need to find its way out of China. There would be multiple layerings in terms of how it's done, whether it's via acquisitions or concealed shareholding, so on and so forth. But there's no doubt that if China, and I think we can assume there is that intent for China to remain as a global force, they would need to hedge out as China as well as the geopolitics continues to evolve.
Right. Now, Vishnu, let's take a look towards markets this week. We've got the Bank of Japan tomorrow, rate decision, and we have US GDP and personal consumption expenditure data, a Fed favourite. Are these the major things that are going to move markets this week, or is there something else our viewers should be looking out for?
No, Jeff, I think you hit the nail on the head. So we've got the ECB as well. And so this week is going to be about the great central bank pushback. So the Fed focused data, and the Fed, of course, the Fed speakers, the ECB and all will be pushing back against rate cut expectations. The BOJ will be doing the exact opposite. They'll be pushing back against any normalization or recalibration of tightening expectations, even though it's taken that, this week, BOJ won't do anything thanks to the earthquake and, less compelling data. But I think the BOJ may go further to say that, look, we're still reviewing how underlying demand pool inflation develops, and we need to look at wage negotiations. So there'll be a slightly firmer pushback. Both ways, I think the bar has been set fairly high. Expectations are laid out. So despite the so-called great pushback, we may not get much of a push one way or the other in the markets. It might pay to be agnostic to dollar trends and instead focus on some differentials in the euro yen.
Right. Okay. Thanks for your insights as ever, Vishnu. Always appreciated. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asia Midday Market Watch. I'm Jeffery Halley.
And I'm Fernandez.
And this video and podcast will be on our website, www.biztech.asia, social media platforms, as well as our syndicating partners, TV stations, radio stations, and websites. Thanks so much for tuning in.